mortgage affordability tests in 2022, would things have been different? I know they've probably improved the nature of those charts right now, but would they have been even more resilient had you actually left it in place for a little bit longer?
Well, I'll start off. I think 2 points on the first part and come on to the test withdrawal point. The first point, in a sense, the first point is the point John just made, which is, what macroprudential policy, and particularly the mortgage, as you just mentioned, Ed, the mortgage policies that we adopted back, nearly 10 years ago now, actually, have done is that they have limited what I might call the number of people who are going to face, the extreme, pain and stress of this. As a consequence. The second point I'd make is a macroeconomic point, that we do have, of course, much lower unemployment in this country. We have a much stronger labour market. We're having to deal with that on another front. But on this front, of course, it is helping a lot in terms of the stress that households are seeing. On the withdrawal of the test, the answer is no, actually. And the reason is, and the reason we withdrew the test is that we had 3 tests essentially applying at that time. So there was the LTI flow limit, as we call it, which is an FPC measure, which is still there. And then we had 2 affordability tests. One was the FPCs and the other was the FCAs. And the consequence of all the work that our staff did in assessing that is that the two affordability tests, and actually also the sum of the 3 tests, if you like, meant that we didn't need 2 affordability tests. One was doing the job. And that's why we withdrew the FPC one, because we felt that actually the combination of the FCA one, which has to be there under rules, and the LTI flow limit test did the job. So, from the point of view of, we do obviously have a keen eye on regulatory efficiency. We felt that did it.